Jordan, very good to see you. We're going to talk through the recent market volatility. Concerns about a cooling U.S. economy led to a market rout recently. The Dow down as many as 1,100 points in earlier trading. Stocks and treasury yields did pare back some declines after service sector data came in better than expected. So, of course, market volatility and corrections are to be expected, but just to show you and everybody watching what that looks like, of course, this is a chart from FinViz, which shows the S&P's 1 week performance. I mean, this is scary to see all that red.
It does not look good. It does not look reassuring if you have all your money in the market, but that's at 1 week. If we kind of change that perspective and look at that over the last day or the last year, it's green, right? You're looking at that. You got a lot of growth we've had in 2024. We got to be long-term thinkers, not short-term when it comes to the stock market, because the secret isn't timing when to sell low or sell high or buy low. It's time in the market, and we need to have a plan around that.
Yeah, if you sold on Friday, you definitely locked in your losses. As you mentioned, though, it has been a very strong year for the markets, especially for tech. And I want to ask about concentration risk, because the correction that we saw, we've talked about this before, the movements in the S&P right now are being led by 10 stocks alone.
Yeah, and I think people think, oh, I'm diversified. I have an S&P 500 fund. Well, you might have 500 stocks, but 82% of that is led by these 10 stocks. So are you truly diversified? Because if a few of those stocks have a bad day or a bad quarter, the S&P 500 is taking a hit. And we saw the rise up with the majority of stocks. But when this stock market corrects itself, these stocks will lead that, because a few of them having a bad quarter or bad year can really impact the year S&P performance.
Right. And just to underscore, being invested in the S&P does not mean you have a well-diversified portfolio. So how has a well-diversified portfolio withstood this recent volatility?
One, you're hopefully not as stressed, right? So you're not dealing with the roller coasters every single day, seeing it going up, seeing it going down. When you have a diversified portfolio and you have other asset classes, maybe bonds, maybe structured notes, maybe these other things, you are more consistent, competitive returns, not the ups and downs. And when the market took a dip last Friday and early this week on Monday, worst day in 2 years, your portfolio was not dramatically affected. You didn't worry about it because you had a plan and you were diversified.
I want to show you something funny now, though, Jordan. So on Friday, I opened up Google and I typed in, should I? And the first option in my drop down was, should I sell my stocks right now? So clearly people were feeling anxious. What should we be keeping in mind during these volatile moments?
The news was talking about it. Google clearly saw that a lot of people were searching that. We need to keep in mind to have a plan, to not make knee-jerk reactions. Your retirement, your financial life is not for 1 day or for 1 week. It's for decades to come. I will be bold if you put that slide back up there, Aaron, if you don't mind. I will say, and the last thing it says on that Google is, should you eat rocks? No, do not eat rocks. I'm going to put my foot down. Don't do that.
Why are people searching that, Jordan?
It confuses me. Technology.
Why are we crazy? We are irrational beings. So, again, though, it does go to prove that we make emotional decisions. We might not have all the information. Rocks are not good for you, but neither is just being invested in the S&P. So, Jordan, if somebody would like to talk to you about crafting a well-diversified portfolio, how can they reach you?
Yeah, they can call our main number, 847-499-3454. We can sit down, see where they're at. A lot of people don't even know how much risk they're taking. They don't know if they are diversified. We'll show them how much risk they're taking, how diversified are you really, and then craft a plan around that.
All right. Jordan, thanks for your time today.
Thanks, Aaron.